Hello everyone, LA here with today's short take. One of my favorite trades, most of the time, and especially in a market that's choppy like the one we have now, is to let the market tell you what it wants to do and then you do something. For example, I'm looking at JPMorgan. You know that they just reported earnings 2 days back. It was on this bar. Big spike in volume. They get over the high, right? So you got a swing point high here. They get over it, they barely hold it, and then yesterday they got an extension off of it. So the money decides to come into this at higher price. That's the key, right? They're willing to quote unquote pay up to get in. When you see someone willing to pay up to get in, that says that when it comes back again, if it does, they're probably going to be willing to pay up to get in again. They're going to average in more. This is not mom and pops buying this stuff. You don't do that many shares with mom and pop. It's institutions putting their money in it. So JP Morgan gets the breakout. If you look at it on the weekly, it's getting the breakout there as well. If it holds, you'd have a breakout on multiple time frames. That says you should go higher, 2 to 3 bars on the longest time frame, which would be the weekly. So that price, chart, ABCD structure on the way up looks pretty good. This looks like a pretty nice post-earnings play. Your stop has to be back down here somewhere, but your target is up in this area. So, JP Morgan, one to put on your list. If it fades back in, not a bad place to try to make a trade. And that is today's short take.